All right, good morning. Welcome back here to Trader Renee. Great to have you aboard. Market hitting a new high here this morning as some relatively positive economic data has come out here for the first of the month. And, the market kind of just remained in this slow motion breakout. Did pull back a little yesterday, rallying a little bit here today, led by the banks and, a few other things that we'll go and take a look at. But let's start with the challenge. And what the market's not being led by is Netflix. And Netflix is down here today, despite the market itself being higher. We still are slightly up on our option. It's been a wild ride for the option. In fact, this whole Micron Netflix mix has kind of been a wild ride. Here ultimately, both in the green, but man, it almost doesn't feel that way, right? Almost doesn't feel that way, but again, it's some of those fallacies of trading that start to play with the mind and everything else. Here we are, Netflix, holding Netflix here as it is in the green, but we are past our auto exit date, so, should it slip, that is something I'll have to move on from. I don't want to. It's doing something very similar to what Micron did, right? In terms of this kind of downside dipsy-do, and, here we go with the pop. So it'd be really nice to be able to weather, Netflix through that same action. But, we'll see how that plays on out. Now, yesterday we saw a whole bunch of downside crossovers, on the board where, 3-day moving averages were crossing down below 7-day moving average, and it was a huge list, right? It was one of the bigger lists that we've seen, but not a single one of them triggered for the challenge, right? We saw things like Under Armour, where, downside crossover of the 3 and the 7, but not a bearish signal. And it's something I was in discussion with someone about yesterday. They were a little baffled of why, how do we not have a downside signal when there are that many crossovers? And, granted, had some valid points, and maybe we should have. But the reality is that, when it runs through the algorithm and says, hey, what's the potential here? Not a lot of downside potential. And, that is just something that is unique to a lot of different stocks out there right now. Now, do they have the upside potential? We'll see. Because things like Under Armour today are switching and going from that downside crossover to the upside crossover here today. We have a lot of that on the board. In fact, for the challenge watch list, we have Conoco, Disney, EOG, Home Depot, Oracle, Under Armour, UPS, and Walgreens. Walgreens is one I mentioned yesterday. If you want to short it, you can short it, but have to use a stop on today's high or yesterday's high. That has been blown out here this morning. We take a look at something like a ConocoPhillips, nice little snapback here today. Chevron, which was down pretty big, snapping on back nicely. But again, no upside 3-7 crossover here on it. Now, I'll be very surprised if we don't go into the close with the signal. UPS and Under Armour both. Neither are signaling right here with the tighter parameters in the morning. But both are in some very interesting positions here. And, we'll go out and, enter one of them, if maybe both of them, depending on, how Netflix ultimately plays out here. But we'll see kind of, where they land here closer to the close today. Now, last thing I want to comment on, and again, the video is going to be pretty brief. I will talk more about some of the data this afternoon. But do want to comment on Micron. And not the price action, everything, I talked about yesterday that, hey, I'm buying this into the close, not for the challenge because it doesn't have a challenge signal, but I really like the chart action. And it's something where when we look at the challenge, okay, you take a look at when we made the adjustment. We made the adjustment here on Micron right here at in the morning, right, 10:28 a.m. and bought the new options on the where's the entry date? There we go. So we bought the options here on the 10:28 a.m. We sold the others on the 10:28 a.m. And what that did is that put us in a time stop of AM, an auto exit stop of AM. And it's rare that we have that. In fact, the algorithm is built so that we don't have that happen very often. And yesterday is a good reason why. The whipsaw effect of AMs are just very high. And yeah, ultimately, would we have gotten out on Micron on a much better price, yesterday afternoon, or possibly held it? Maybe. We can go through all of that, hypothetical. But the reality is that one of the big reasons why the morning parameters are so much tighter is because of what we saw in Micron. And we've seen it in the data over the last 3 years where, well, now going on almost 4 years, where just the morning whipsaw action is significantly higher. And it's why we tend to opt in or tend to tighten things in the morning. And yeah, we could get a morning signal. We could get an Under Armour signal. In fact, if the algorithm was loosened just a little bit, we'd be sitting with an Under Armour signal here this morning. But the whipsaw risk is still just very high in the mornings in general, and it's why we opt for more of the looser, having it not as tight at the end of the day, a little tighter here in the morning. So, Micron's a good example of that. Now, there's no way to avoid what Micron did. I guess I could, manipulate it or whatever, but, we'll continue to run. And when this type of thing happens, we hit our target in the morning, we'll go readjust. We'll adjust our auto exits and everything else. But, it's one of the reasons why new entries, morning time, just, not as frequent there here for us. All right. Thanks for hopping on. Have yourselves a fantastic day. I'll talk with you here this afternoon. We'll go over some of the economic data and, kind of what that looks like. And then take a look at Under Armour UPS, see if we have a signal. And if we do, go out and trade that. Again, thanks for hopping on. And we'll talk to you later. Take care.